3 minutes analysis with Mofri. Today I want to show you a very easy strategy that is called break of structure. We are on daily time frame and this pair is USD JPY. First, you need to identify what is the trend of this market. We can see that this market has been trending up, making high highs and high lows, high highs and high lows, and now we are on this consolidation. So the first thing that you need to understand is to mark your highest point and your lowest point. So my highest point is this level. Remember, we do not concentrate on the current market. We want to find our highest point and the lowest point. Your highest point, of course, is the highest point is your resistance, the lowest point is your support. Once you have these two things, you need to ask yourself, where is my market forming? Is it forming at the support or at the resistance? This market is very clear. It is forming around resistance. So if we wait for this market to come all the way to break support, we may wait forever. So what do you do as a trader? Mark your nearest support. So we have to mark our nearest support and then we can be able to know what is really happening. So once I mark my nearest support, I can understand that this market has been coming upward. It has been coming upward like that. It's an upward trend and we have got in this consolidation. So the minute the market we have seen here, there is break of structure. Very clear, there is break of structure. What do we understand? That the market has to go this distance, the consolidation distance. This is how you measure. The market has to go this distance above because already we have break of structure. So you know the market has to go above and we target that zone. How many pips is that? Let's calculate how many pips. The market will eventually go 491 pips. But the mistake many people do, they just place a buy trade without a direction. Don't place a buy trade because you know where the market is going. You have to be very keen on your entry and your target. What I tell many people is your target should be half of this zone. So our first take profit will be that half. That is our first take profit, that half. And then we should go to 4-hour time frame. We are going to 4-hour time frame. What are we looking for? For retracement. BOS always equals retracement. Market can't just break and you enter buy thinking that the market won't retrace. Don't chase this buy, wait for retracement. So we are waiting for this market to retrace so that for us, we can start buying and continuing with the trend. So don't worry, even if it is almost to hit our TP1, don't worry. So the market now, it begins to go down. Now the retracement has started. So we are not worried because the red candle, appearing of the red candle, it means our market has begun to retest. So what do? You'll come and write your 3 rules of entry. You will write your 3 rules of entry. So these are your 3 rules of entry. The first rule is very clear. I have written here. The first rule of entry is wait for green candle to form. The second one, check if it is bullish engulf. If not, WBB. Not WFF, WBB. So that's what you do. WBB is what you do if the candle is not engulf. So we can see here that the market, what has it been doing? The red candles are forming. So we are waiting for green candle to appear to see what happens. So we have a green candle, guys. Once you get the green candle, remember our target was this half, but our overall target is here. Once we have the green candle, we go back to our entry criteria. Wait for green candle, check if it's bullish engulf. Is this candle bullish? Yes, it is bullish. So our entry again, because let's see our take profit 1, how many pips? Our take profit 1 is 98 pips. Remember, the market will always come to the last tip. So what I tell many people is that if you want to target the whole lot, you will do another half of this distance. So the last take profit that you can target on this market, the accurate one is around that zone. So if we get in, you have 2 positions. You can position 1, you can target take profit 2. Position 2, you can target position take profit 2, but for the position 3 you have to be very, very careful, because most of the time the market does not hit take profit 3, but for take profit 1 and take profit 2 it is an accurate trade. So let's play and see what really happened, guys. Let's play and see what really happened. So eventually the market hit our take profit 1 immediately after we entered the trade, but after a very long struggle it hit take profit 2. And I'm curious to know, if at all we had targeted take profit 3, what could have happened? Let's see if we had targeted take profit 3, what could have happened. You see, the market, of course, went to take profit 3. But the question is, you see, it went back all the way to here. So many people get it wrong. Whenever they enter the market very well, they over target, but they get stopped out. So guys, always make sure once you know how to enter, your targets are correct. Thank you, and I love you.